Biotech's first half of 2025 was a wild ride through volatility, policy shocks, and shifting investor confidence. Investors started the year with cautious optimism, fueled by J.P. Morgan conference buzz, FDA approvals, and M&A chatter. But the optimism didn't last. January's modest rebound gave way to February's drawdown, then March's collapse. Dr. Peter Marks resigned from the FDA, triggering panic that dragged XBI to new lows and shattered credibility. The second quarter brought more whiplash. April bounced, May disappointed after Vinay Prasad's appointment, then June rallied on short covering. Retail traders got excited again, but the sector remained fragile. XBI down 8%, while the S&P gained 5%. Looking ahead, regulatory credibility, volatile ETF flows, and summer illiquidity all threaten any potential recovery. The Biotech Capital Compass blends scientific imagery with navigational guidance, symbolizing the newsletter's mission to chart a course through complex markets. This Queen's industrial scene grounds the financial story in real-world infrastructure, captured during summer 2025. Coming up, a 3-part series explores gene editing and gene therapy, two related but distinct technologies with major investment implications. The Biotech Capital Compass delivers sharp analysis and actionable strategies for active investors navigating this dynamic sector. Partosh Singh brings 3 decades of experience in drug development, strategy, and biotech analysis to help investors capitalize on opportunities. 4 key ETFs, XBI, IBB, SPY, and IWM, serve as performance benchmarks, tracking different market segments to evaluate biotech's standing. XBI holds small and mid-cap biotech stocks through equal weighting, making it a high beta proxy for sector sentiment. January 2025 saw XBI post a modest relief rally after a brutal 2024, though caution still dominated investor thinking. IBB led with nearly 5%, XBI gained 3%, SPY rose 2.7%, and IWM added 2.5% in January. January's key themes included M&A buzz from the J&J deal, FDA approvals, macro worries over tariffs, and tactical retail buying. Sentiment evolved from early capitulation through mid-month J.P. Morgan buzz to late-month cautious optimism with shallow conviction. This chart shows IBB outperforming with institutional preference, while XBI bounced modestly off oversold levels throughout January. The technical chart highlights XBI testing support and attempting to reclaim its 50-day moving average amid death cross warnings. Political shifts, NIH budget concerns, and tariff fears all pointed toward February risks that would test January's fragile bounce. February reversed course. XBI lost over 4% despite strong headlines, revealing fading risk appetite and mounting frustration. This table organizes February's themes: policy overhang, M&A activity, institutional rotation, retail frustration, and catalyst signals shape the narrative. The chart shows XBI declining over 4%, while SPY held relatively firm, illustrating biotech's underperformance despite positive catalysts. IBB held at best at -1.2, SPY fell 1.3, XBI dropped 4.3, and IWM lost 5.2% in February. Sentiment deteriorated from early false optimism through mid-month policy jitters to late-month capitulation and cynicism. January's predicted risks materialized. RFK confirmed, M&A deals failed to rally stocks, technicals broke down, and fatigue set in. Retail flow fatigue, macro spillover from small caps, and FDA news decoupling from prices all signaled March risks ahead. March delivered the worst decline of the quarter. XBI fell nearly 9% after Dr. Marks resigned over political interference. This chart captures March's dramatic sell-off across all indices, showing how FDA leadership turmoil triggered sector-wide capitulation. IBB fell 6.6%, IWM dropped 6.9%, SPY lost 5.6%, and XBI plunged 8.6% in March. The crisis unfolded from early volatility through mid-month shock when Marks resigned to late-month full capitulation mode. March's themes centered on leadership breakdown at FDA, escalating policy risk, retail exhaustion, and complete technical breakdown. The highlighted circles emphasize XBI's 9% collapse and dramatic divergence from other indices as investors rushed for exits. FDA's leadership vacuum, institutional exits, and small cap stress, with IWM down over 10%, all pointed toward April risks. The first quarter was biotech's hope hangover. January flirted with rebound, February stumbled on policy, March face-planted into FDA drama. Sentiment moved from January's tactical optimism through February's choppy cynicism to March's structural despair at new lows. April offered a rare breather, with XBI rallying over 2%, though the tone stayed hesitant and tactical, not euphoric. XBI gained 2.3, IBB fell 1, SPY dropped 0.9, and IWM lost 2.3% in April's modest recovery. This chart shows XBI's outperformance driven by oversold conditions, though the modest rise suggests the bounce lacked real conviction. April progressed from early bargain hunting through mid-month skeptical stability to late-month tariff concerns as Trump announced EU measures. April's themes included ongoing FDA fallout, tariff and policy risk, retail meme trading returning, and selective fund flows. The technical chart shows XBI attempting recovery but remaining below major resistance, confirming the bounce was technical, not fundamental. FDA credibility gaps, tariff escalation, and retail retrenchment all signaled May risks of funding constraints and correlation pressures. May became a confidence trap. XBI tried crossing its 50-day average, but closed down 4.5 after Prasad's controversial appointment. Vinay Prasad's appointment as CBER head sparked concerns about gene therapies, chilled innovation, and reinforced institutional hesitation. May unfolded from early hopeful rebound through mid-month CBER shock to late-month confidence collapse and sarcastic capitulation. Large-cap tech soared while biotech funds bled out, showing how positioning reflected confusion despite broader market strength. Prasad's elevation, retail-led volatility, and broken technicals all pointed toward June risks from summer's catalyst void. June brought biotech's first real uptick in months. XBI rose nearly 5%, though it stayed well below key moving averages. June moved from early breakout hopes through mid-month stall to late-month macro lift from Russell and S&P strength. High short interest set up the squeeze, and the short covering rally delivered, showing technical positioning drove June's gain. Resistance at the 200-day average, policy flip-flops, ETF volatility, and M&A dependence all signaled July risks ahead. The second quarter was a slow-motion rebound. April offered relief, May collapsed with Prasad, June rallied but felt like a dead cat bounce. The quarter moved from April's modest relief through May's collapse after CBER concerns to June's momentum-driven rally without conviction. June's rally at nearly 5% outpaced April's 2.3 bounce, showing stronger momentum but still insufficient to restore confidence. Heading into the second half, sentiment remains fragile. Retail's hopeful again, but real money flows stay sparse, and volatility risk looms. The 200-day moving average near 89.50 is the key battleground where bulls and bears will fight for control. M&A chatter fuels deal hopes and supports valuations, but raises questions whether speculation can turn into actual transactions. Now for the regulatory disclosures. Transparency about the newsletter's purpose, limitations, conflicts, and legal disclaimers. This newsletter is for informational purposes only and does not constitute financial, legal, or investment advice. Past performance is not indicative of future results. History can't guarantee what comes next. Risk disclosure covers stock volatility, options risk, and potential loss. Readers must understand these before investing in biotech. The affiliation disclosure includes holding positions in BBC, IBB, and XBI ETFs, ensuring transparency about financial interests. Biotech investments face additional risks: regulatory approval uncertainties, clinical trial outcomes, and high volatility beyond general market challenges.